Hey, what's going on, everybody? Happy Saturday. Finally got the Money School 401k approved on for Thinkorswim, and this is the advanced platform from TD Ameritrade. What this lets me do on the desktop is just get a little bit more data and insight, and then customize it a bit more than the tablet version. So the way that I have this set up here is the company name in the sub industry, so we can quickly see, what it is and what they do, the percent change in their most recent trading day and their the last trading price, the market cap in millions, the price to earnings ratio. Percent change is the change in stock price over different periods that I set up. This first one is 16, the second one is 128, and the third is 512 days. That's also, 2 weeks, a quarter with both earnings statements, and a little over a year. Uh, it's also 2 to the third, 2 to the seventh, 2 to the ninth. Um, those are numbers that are more or less arbitrary in the grand scheme of things, but it's the way I've always enjoyed sorting them. Um, and then stochastic is uh, basically an indicator that is going to show if we're overbought or oversold. I have another lesson on that. You can watch that full lesson on this, but over 80 means something is generally overbought over the last 14-day period. I have this set up to 16 because I have this at 16 days. So this is a little bit of a custom setup for me. This is stochastic over 16 days, the last 16 trading days. Over 80 means something is overbought. Under 20 means something is oversold. So I like to sort by this and just see what's working in the market and what's not. And you can quickly see, what has had a bad go of it. And you're always going to see this 16-day period, the stock is sold off. But then I also like to be able to quickly see, well, how has it been doing other than this short-term period? So I find this really useful, these 4 columns here, just to quickly sort through stocks and see what's doing well and what's participating in rallies, what's not. And then I'll just go through and take a look at the outliers. And over here I have, this is just a year-to-date 1-day chart. And it's easy enough to see even kind of collapse down to this third of the screen essentially. And you can kind of generally see what a stock is doing and what it's done year to date. Everything has dealt with coronavirus. How has it recovered out of it? Here's the V. It's kind of drifting slightly, but this is a pretty strong recovery in Zillow, considering you could have gotten it under 19 bucks and now it's trading over 101. It's just, it really goes to show, if you're a younger person especially, you should be buying all dips no matter how catastrophic it feels. DraftKings, you'll see this not available. That's because this is a newer company that doesn't have data going back for 512 days. This stock has just been a rocket ship. This has been trades with the coronavirus news. Every time that things are open and sports are being played, DraftKings is going up, and anytime they have to cancel games, it's going down. Target is one that has been doing really well and has a really impressive chart. Get out of here. On their recent earnings, they've gapped up, and they're at this really critical, as you can see, again, with the tick bar chart, the left tick is where it opened, traded down. This was the full range, and then it closed on this number, and that's the same level that it's at right now. This is a max monthly. This goes back into the 80s. This has been a strong performing company. I don't typically shop at Target, but I did recently, and it was packed. And there's not a lot of places where it feels like that. Like Fred Meyer's and Kroger, not quite the same. Target seemed like it was pretty busy. And they really benefit from being an essential service provider that can also sell you other stuff. Um, this is a company that, if you're a regular shopper at Target, I think this is something you should have in your portfolio. And even if you're not, but I really believe in owning the stocks wherever you spend money. And I know that this is a company that a lot of uh, my friends and family, they know and they understand, uh, and this has been performing really well. So um, ever since it's been riding this since the middle of June, I mean, it's picked up 40 points. So let's see if it can hold this 156 number. But if it can, I mean, it could be another nice move up. And if not, if it sells off and it comes down and touches this, I mean, the 50 days, 140 bucks. If it gets down to 140 bucks, we'll probably pick some up. Let's see what's getting beat up. Google has had a, oh boy, look at that. From 1726. That's a pretty hefty sell-off. That sold off all the way down to the 200-day. We're not seeing a lot of these companies sell all the way down that far. So I wonder what's happening at Google. I don't have any particular insight what's happening. I mean, I'm really starting to underperform on a long-term basis with that sell-off. Wow. And here's the next lowest on the stochastic, and you can see that it's failed the 50, but it hasn't nearly gone down to the 200 and tested. Visa getting close to its, I rode this from 135 to about 208, I think it was, in another account, or before I rolled all this stuff over. And I got pretty lucky with that sale, and it really hasn't done much since. It was, I believe it was in this range here. CRM gapped up on the last quarter, and then also the news that it was being included in the Dow. And a really nice run, but since then, I mean, this is why I like looking at stochastic, because you can see, clearly these are stocks that have sold off. It might present an opportunity. Salesforce is a company that has, been a really good company historically. Let's look at Dexcom, because this is the highest performing stock that's in this heavy sell-off range. This is when we had in the portfolio and we let it go. Just get all this off here. We bought it, and while the market was, we're already really extended in this, in this run that it had. And let's zoom back out on here. And we picked it up, and we did not hold it very long. Ended up trimming it and turning it into Nvidia, which has been a better move. We want to see this over this blue line, the 50-day. It needs to close above that, and it could have a nice move back and go up towards highs, but we need it to close above 420 about before we're interested in this one again. The other top performer over a year plus basis that's been selling off is DocuSign. A bunch of old drawing sets will clear, start over and everything. And this is another one that we held. Okay. And we just kept buying the dip all the way down, and we ended up getting the bottom tick here, which is great. But um, again, this was one that we bought it down, got our basis down, um, got a nice move up, and we liquidated it at 205. So this is one where we made some money in, and as it got to this number, as it got close to this 50, I think this is going to be one that bounces and goes above. We'll probably get back in on a position in DocuSign. Um, as in the last live stream, the last two sessions, I just consolidated everything in the portfolio. Um, we're only holding 4 positions: Amazon, Nvidia, Square, Tesla, and we're up on these positions. But the reason why we did that was just the market in this drift. We were feeling this. There's a lot of stocks that are at or failing at their 50. And I just want to own quality until we can get a little bit more confirmation that we're in good, in good hands. We're not going to miss anything to the upside with the 4 stocks that we have. And once we can start clearing some of these 50s, we're going to trim those core 4 down, and then we're going to go back out to 8 to 12 positions. So that's the plan. So right now we're just keeping an eye on everything. Shopify over the last 512 days is up, 500%. What else is out there that's really killing it? Enphase is a company that does, they're involved in the semiconductor services space. Going back and looking at their max monthly, I mean, since the middle of 2017, I mean, come on, this has just been a rocket ship. So this is one that has been really good on pretty much every single metric. Nvidia under 30 means it's getting sold off. Not crazy, but has been, an opportunity if you wanted to get into it. So this is our year to date. We trimmed a little bit early on, but we've just been adding, and now it's our top position. Just been buying it, bought it all the way down. The best price that we got was 484. Going back to this max monthly, once we hit this breakout, that's $300. It's been a nice move to 500. I think this is one that just continues to go higher. Their new product launch is amazing. It's down this tick. This is the whole month of September. We opened at 537. The high was 589. The low that we've gotten to was 465, and right now we're trading here. This is almost what's called a doji, which does not matter. But it's basically where a tick opens, has a big range, and closes at the same level. Usually it's an inflection point of some kind, like this. Here's a good example of one. And here's a good example of one. Usually it represents the market being uncertain or, kind of indifferent or not knowing quite what they're looking at. This is when Amazon, I think, has some really critical levels coming up, facing its 50-day at 31.75. But if we hit that, I think we're going to hit highs. The stock's just been a monster performer for 20 years in a row. I mean, like literally 20 years in a row. Talking huge financial crisis is barely a blip on the long-term chart. I think this is one of the better looking setups to break through this recent sell off. I mean, I've just been buying it down. Got it at 29.25 was the lowest share that we got, and now it's our biggest position. So I think that this one is one that will finish this year. I think it has a really strong potential to finish. I think it's going to, by the end of this year, touch highs. And depending on how strong this holiday season is, I think there's a good chance that Amazon is closer to $4,000 by the end of the year. I know that's a crazy call, but I think the news is going to be really strong for the next short term, and eventually they're going to announce that they're going to split this share, and probably 10-1, 12-1. I mean, how they're eventually going to split this down, and it's going to get the same exact mania that Tesla and Amazon and Apple got. It's just in the short term, they're just going to continue to dominate. They print cash. I think that this chart's going to be one that you want to be a part of. It's one that I'm a part of. But we got some key overhead levels pretty close. So if we can't hold this, we're going to have probably a pretty tight leash around 3K. So we're not going to have a stop loss on, but we just want to keep a close eye on these key levels here. And then as we get to the 50, see how we react. It could be a nice gap day where we gap and move higher. And I mean, sometimes the move in Amazon is just like incredibly powerful, where you'll go in the course of a month, like this went from 26 to 33 and 700 points off of a lower basis. So it's like not even that crazy of a call to have it go back to highs and maybe 4,000. So who knows? I think we're going to get a move that looks something closer to this. Just drawing a quick extension. This is coming off of the bottom. Here's our low move. And it's right in line at the 50. 168, this is going to be a really powerful resistance number. So we're going to have to, this zone between 31 and 32, really critical zone. And you can see there's a lot of key ticks in here, some big gaps. If we can break through that, that's 3,700. Sorry, just getting this set up, and the defaults are goofy, so I have to go through a million times. What? I'll get these settings sorted out. This Fibonacci extension from the crash and sell off, this is the move I think is really interesting. So just over the last 16 days, two best have been DraftKings and Penn. Had a really terrible trade in Penn, put it on, ended up closing it when we reconsolidated everything together, and then the next day it shot back up. It wasn't a big position, but this is definitely one I want to keep an eye on. And then the worst thing in our ecosystem was Lulu, which has still been a great stock, and DocuSign. Of all these ones that have gotten beaten up recently, I definitely like DocuSign the best. I think it has the biggest growth upside. I think it's going to continue to go back. I mean, it had really a big sell-off from $290, and it's another one that once it gets above its 50, there's a lot of airspace between above the 50 and its all-time high. So you could see some pretty nice moves to the upside. So let's just see if they can hold that. It already closed above it, that's a great sign. So this is one that we don't want to be out of for too long. We're not going to miss too many points on this, hopefully. So this will be probably first on the list once we spread things back out from our core 4. And again, Adobe, same situation, just gapped up on the 50. And I think this is one that we could see a nice move back up towards highs. So again, Adobe is another one that we're going to want. There's this kind of formation from the top selling down to the 50, kind of grinding along the 50. I think the tech stocks are going to be the ones that base on this level and move higher. And then you're going to see some of the other sectors, and they already kind of have, is hit their 50s and sell down to the 200. I don't think we're going to see that in tech. Here's QQQ. All the triple Qs sold under the 50. We need to see this close above 272, which, I mean, again, it's this kind of same pattern. If we can close above this 50, we're going to want to be a part of it to the upside, and that's how we're positioned. SPY is underperforming, means under its 50, and it has quite a ways to go. I mean, it has, you know, a couple good days probably before it gets back up to that level. So the tech is just kind of leading that, I think. It's probably good for now. As always, appreciate your support of the Money School podcast, the Patreon. One thing that I won't announce this yet. Got some cool announcements coming up. Excited for a bunch of things that are happening. And yeah, I really appreciate your support, and it's only going to get better from here. So have a good rest of your weekend. Podcast tomorrow, and I'll see you Monday morning.